Alright guys, welcome back. It's LSP. It's coming to the 28th of January 2020. Today I just want to discuss the economic calendar, not specifically for today or this week, but in general. I'm using the Forex Factory economic calendar. If you don't know which one this is, if you just go to forexfactory.com, click the calendar tab at the top, and it will give you a full week, and you can go forward and back each week. I like to look at it like this. I don't like looking at it individually for each day. I want to get a feel for the entire week, sort of from Sunday right through till Friday. And it gives you a good indication of what's of what's coming this week. So, for example, if I was just looking at today, I would have no idea, that there is a rate announcement tomorrow and a rate announcement on Thursday. So, if you look at this at the beginning of the week, you get a good feel for what could potentially be unfolding for the week to come. The reason I want to discuss this, I want to give you guys some ideas and some thoughts on whether or not it makes any sense, to trade around news releases. Yeah, this is a question that was emailed to me about 3 weeks ago, and I've just not had time to get round to it. And it made sense to me to just do a public video on YouTube to just explain some of my thoughts, not necessarily the right ones, but just some of my thoughts, and give my opinions and see whether or not they make any sense to you guys as well. I'll just show you as well over here. If you just click this, I've taken these two off. I think they're useless. So we've got like the medium impact and the high impact news releases here, all types. I've just got the Aussie dollar, Canadian dollar, euro, pound, JPY, and then obviously United States dollar. Got no interest in the New Zealand dollar. I actually don't have an interest in the Aussie dollar either. I just have it up there because it's affected by minerals, oil, not oil, sorry, copper, iron. And in some respects gold, so I do have that on there for some cross analysis that I do. Excuse me, but I'm not interested in the Swissy and some of the other ones. I've got no interest in those, but you can pick and choose which ones you like. If you really want to get into it, you could even do a study on taking some of these off and putting some of these back on and seeing what the news releases are like around those types of events, and actual news releases, which would be quite interesting to do. Maybe I'll do the study myself at some point. So anyway, we have a finite amount of time to trade the Forex market, specifically Forex, okay? Now, obviously, we know that the market's open from Sunday right through till Friday, but we have a finite amount of time where there's generally more volatility. If you try and jump into the markets, at pretty much any time, every hour, for example, throughout every day, you'll find that you're going to find slower moves. The Asian session is very slow. I actually stayed up last night. I did an Asian trade on the Aussie dollar. Very briefly, I was doing a study on that. I wanted to see something that I've been looking into. Painstakingly slow, boring. If you look at sometimes, say, between London and New York, let's say, in fact, forget London and New York, let's say after the New York close, and this is GMT time, so around about sort of 5, 6, 7, 8 o'clock in the evening. I mean, it's just crap. The market's very slow. But obviously, the London session, the New York session, when the equities markets are open, you get a lot of movement, a lot of volatility in relation to previous volatility that I've just described. So, does it make sense with such a finite amount of time, to capitalize on these movements, to capitalize on these injections of volatility, these moments in time where we can say, okay, look, this particular week is coming. Monday we've got, the euro high impact news release at 9 o'clock in the morning. Yeah, today, later this afternoon, or probably in about an hour, actually, in about an hour's time, we've got core durable goods orders. Now, bear in mind, I have no idea what this is. Yeah, and forgive me for sounding ignorant. I guess I should after all these years of trading. But I've got no interest in understanding these numbers. I don't understand these numbers. I don't want to understand these numbers. But obviously I'm just describing. We've got core durable goods orders. We've got durable goods orders, and then later this afternoon. Again, these are all GMT times. At 3 o'clock, we've got the CB Consumer Confidence and Richmond Manufacturing Index. But the point is, we've got some, medium and high impact news releases coming out within the hour and within the next couple of hours, 3 hours. So it's important when we're looking at this to say, okay, does it make sense that I should just focus solely around these times? Yeah, because when these news releases come out, we should expect some volatility, right? We're expecting volatility. They're high impact news releases, like after midnight tonight at 12:30 Wednesday morning AM. There's going to be some news coming out on the Aussie dollar. High impact. I'll be watching this, and I'll see if there's an opportunity to take a quick scalp on the study that I'm doing on Aussie dollar. And then tomorrow afternoon, obviously, we've got the FOMC federal funds rate announcement. Now, the one thing I will say about this, these big news releases, the rate announcements, FOMC, non-farm payroll, I don't trade around these news releases at all. Yeah, I've got no interest in trading around these news releases, but I watch them and study them intently because I want to see what price is doing and where they're going to be pushing price, and which liquidity pools they're going to be running for, because it just makes things so much easier, for the following week. But as it stands, if you were to and this is not my advice, these are suggestions, thoughts, all for education and study. Yeah, if you want to study the markets, this is a very good way to study the markets. If you were to just trade around these news releases, taking into consideration not the rate announcements, not FOMC, and not non-farm payroll. Take those three out of the equation and just focus on the other news releases, just like the goods manufacturing indexes and things like that. The ones that we see here, consumer confidence, Canadian GDP and things like this. These are the ones that we want to focus on. We've got no interest in the other three. That's crazy shit, Although they've been quite muted in the last couple of years, generally, if they kick in and shit hits the fan, and some news event comes out, during a rate announcement, and there is an actual change, or FOMC, there's some big news that comes out, whatever the case may be, that is, that affects the market, you're going to see some crazy price action, and you very well may get burnt. We know brokers open spreads at these times anyway, so just my advice is stay away from all of that stuff. But if you were to just sit down, say this morning, sit down, at 8 o'clock, and I say, right, in fact, let's do a start of the week. You sit down at the beginning of the week and you say, right, this is what I've got to work with. So I'm looking at all of this and I'm saying to myself, right, I know at 9 o'clock AM, I've got high impact news release on the euro. Okay, so I can focus on euro on Monday at 9 o'clock, and potentially see if there's a tradable scenario there. And you have to understand, obviously, what you're doing. It's no good to just take a guess and then let the news release come out while you're in a trade. I would not suggest that at all. But as a study, what I used to like to do is, and this wasn't news related, but what I used to like to do is I used to, start at the beginning of the week and I would make a note on the hourly chart of where I think price is going, and then I would just leave it. And then I'd come back to it at the end of the day and I'd see whether it's gone for one or one for the other. I would be leaning more towards one than the other, based on some higher time frame stuff, but mainly the hourly, because you can see the flow of price as it's going into or away from some of these liquidity pools or levels. And I would leave it. That would be a very good study to do, to have, your levels marked and say, right, I'm expecting this to happen, and I'm going to watch what happens around, the 9 o'clock news release and see whether or not these prices are driven to. And you can have closer levels and levels that are a little bit further away and see what price is doing as you're monitoring price during these news releases. And then on Tuesday, we've got euro, i.e. today. That was pretty muted, to be honest, and then we've got the USD, and then we've got USD later this afternoon, so we know we could potentially get some more movement later this afternoon, on all currency pairs, because obviously the US dollar, does tend to affect most of what's going on in the Forex market. Not always, but most of the time, so my focus may be, I'm looking for, USD front currencies, USD CAD, USD Japanese yen, USD Swiss, and so on, and see whether or not there's any favorable opportunities there during, these news releases, a little bit before and then a little bit after. Wednesday, I can sit down and say, right, well, the Aussie dollar is coming out, and this I will be doing this evening. I'm going to look at the Aussie dollar this evening, wait for the news release to come, do the study, and then move on. Tomorrow, obviously, we've got the fund announcement, leaving it alone. The funds rate announcement, leaving it alone. The Thursday, I'll be leaving the first part of the London session alone, but then going into the New York session, I will be paying attention again to the US dollar front currencies. USD CAD, USD Japanese yen are the main two that I look at. And again, I'll be doing studies around these times. Friday, focused on Canadian dollar and the USD. Yeah, so that this is a perfect opportunity to do a good study on the USD CAD. And then obviously when you have things like oil inventories coming out, They're great. They give you, a good opportunity to study the Canadian dollar, all the Canadian dollar pairs, mainly the USD Canadian dollar, and it makes sense to do it during these times because it gives you a good feel for what's going on in the marketplace during these news releases and which liquidity pools are going to be driven for. But the real, I guess, heart of what I'm trying to get across is a lot of people fear news releases. And it's mainly because of, say, 10, 15 years ago, where non-farm payroll, FOMC, mainly the non-farm, used to come out and the stock market would go ballistic, yeah? And a lot of people used to get burnt. I used to get burnt. I've been burnt many times trading non-farm payroll. But when you start to understand what it is that you're looking for, whether it's a good read on price, whether it's an indicator-based system, whether it's supply and demand, whether it's something basic or simple, whether it's Elliott wave, harmonics, it really makes no difference. And I'm a big proponent of this. You guys know by now that I always focus on the trade. I've got no interest in the system, period, whatsoever. The random trade study that we're doing over at Patreon, I've just done an update on that. It's been open from the 8th of January up to the 28th of January so far, 71 trades, all random. Okay, some long, some short. Okay, and the system is currently still at break even. Yeah, it's at 0.0. The last update that I did, it was at 0.01%. Yeah, the highest it went was 0.22%, and the lowest it went was 0.08%. Yeah, so the system isn't the issue. We as traders were the problem. And that's the focal point. So going back to the to the calendar, because people were burnt so much in the past, that idea of the extreme volatility, the brokers taking the piss, widening spreads way more than they should have been. Now it's not so bad, but back then it was terrible, especially on stocks. Would cause so much volatility and so much pain of traders losing money and so on and so on and so on. That idea of the news release and these big events, and just general news releases scares people, So they have this idea that, oh, no, I'm not going to trade around the news. I'm going to wait for the news to come out and then I'm going to look at the marketplace. Or I'm just going to avoid it altogether. But then you're missing out on such a valuable tool and opportunity to study the markets during these times when we are going to get more movement. Even if it's not a lot of movement, we're still going to get something. Yeah. So don't be afraid to study the markets during these times. Get a demo account. It's free. It's safe. Even if you want to paper trade, I guess it's good to have a demo account because then you can kind of mess around with, some of the numbers and stuff. Treat it realistically, guys. Don't go and open a demo account. I know a lot of you use them, but don't go and open a demo account with $500 million or whatever, yeah. And try to trade that. That's not realistic. You're never going to have that sort of money, when you're trading, your Forex, when you're trading the Forex market. Be realistic. If you know that you can comfortably get together $5,000 or £5,000 and put that into a trading account, or that's your goal, then just trade with a $5,000 trading account on your demo. Study, do it around these news releases, and I think you'll be pleasantly surprised. You'll find that you could probably work out a way to trade around these times where it's going to afford you the ability to fit this into your schedule in a way that makes sense for you, and find those really nice opportunities where you can make, the studies work for you. Yeah. So again, look, with all of that said, guys, I just want to, I just wanted to come on, do a quick overview of the economic calendar, some ideas and thoughts there. I do use it. I do like to study around these times. There are some other things that I'm doing, that I have been doing over the last sort of 3 to 4 months, on the Asian range. Not the Asian range, sorry, the Asian session. With how it moves, how much of a factor does it play, in the overall Asian market, mainly for the Japanese yen. A lot of the study that I do on the Japanese yen is interconnected with some of the other things that I do, with the broader market. What you'll find is the Japanese yen is actually a very interesting currency. It controls a lot of the market. It's very manipulated, okay, and if you understand the Japanese yen and get a good grasp of how the Japanese yen moves, how it works, how the country itself, Japan, operates, then you will get a better feel for and a better understanding of the way gold moves, of the way the United States dollar moves, and the relationship between the three. And you'll be, like I said, pleasantly surprised. But you have to do the studies. If you do something long enough, you notice stuff. Yeah. So if you do the studies long enough, you start to notice things. If you just do it once or twice or 3 times or for a couple of weeks, it's not enough, guys. You have to do this stuff for months and months and months for you to get a good feel, for what's going on. And to give your mind and your experience time to pick up on these small little nuances. And you may see something and say, wow, I didn't realize that before. Is that something is that something that happens a lot? Make a note, and then it's something that you're aware of going forward as you continue your studies, and you start to realize, actually, yeah, this has happened in the last, say, 6 months, about 4 times, and on all 4 occasions so far, it seems to be, it seems to do this, and it seems to affect the other pairs like this, and so on and so on and so on. So, thoughts and ideas, guys. Thoughts and ideas, as always. And I'll just finish the video just as a quick brief overview. I have got the Man vs Machine series that's going to be continuing for the remainder of the year. Really looking forward and really excited to doing that. Nothing's changed since the first initial episode. I just had a very, very small couple of trades, which have added maybe an extra 50 pence to the total amount. But obviously, we're going to continue to, I'm going to continue to add, as much as I can to these accounts, but being as realistic as possible. We've obviously got the Wealth Simple account. That's £10 going in there every week. There's going to be the trading that I'm going to be doing. We've got the Darwin X stuff going on. And then I'm going to be, putting a little bit of change aside as well. Any spare that I've got, it's all going into this journey. But again, it's going to be realistic. It's going to be realistic, and then obviously there are some other things that we can put into play, but we can't do those until we get past £1,000. Yeah, and we'll see how long that takes. So in the meantime, guys, I hope everyone's well. Hope everybody's had a great weekend. And I wish everybody a prosperous week. And I will catch up with you guys in the next video. Take care.